both sides are digging their heels, but in the meantime, people are hurting where they were getting $600 additional into their from unemployment, and now that's since lapsed. It will affect the economy as a whole because that $600 kept getting recycled into the economy and pushing the economy further. We're not going to see that now that that money is not coming. So the economy is going to be a little bit bumpy right now as far as the numbers. And I would say look out for the next month's numbers that are going to come out and see what happens there, because that's going to be a true, in my opinion, a true telltale sign of what's going on going forward. Value, growth, both have their merits. If you look at the returns on both, depending on when you decide to get in, there is also there might be large gaps versus growth versus value. And then in times where value is ahead, there's large gaps where value is ahead versus the growth. So I would say you want to own both. You also want to own the tech names, albeit maybe in short order you don't want to own as much as before. And you may want to start looking into the fixed income, i.e. treasury bonds, corporate bonds, and the like. They're not, it's not a question of making 6-7% on the bond. In the bond realm, you're looking anywhere between 4 and 6%. And you know that some of these returns are below 1%. So you have to be really strategic about where you want to go in as far as fixed income, the bond market is concerned. And, some people are talking about commodities like gold. Some people are talking about Bitcoin. These are all areas that we're looking at, and we're just not convinced that that is an area that we want to pledge more than 5% into at this point in time. Gold, since it's had a retreat, some people are thinking about getting back in. And if you're thinking about being a short-term profit trader and the like, I say always be careful, because gold has a nasty tendency to go up very quickly when times get bad, and then it's all of a sudden it comes back and it bites you and says, I tried to warn you, it went up really high and then I'm going back down. That's just how it works with gold. I've seen that, and a lot of commodities are that way. Here's what I would say about they are those gold or Bitcoin. They're very important to new and emerging portfolios. All right, people are going to want to get in on this, but you want to say to yourself, do I want to commit a lot of capital to this particular sector? And the answer is we don't commit a ton of money to this because we don't want it coming back and hurting our clients, so we wait a little bit and we say, hey, why don't we just see if there's a 5 or 10% retreat, and then maybe we'll go in a little bit by bit and profit that way. And it's the same thing on the upside. If we see it reaches our target of 10 to 12% or a little bit more, we will sell out of that position and maintain that strict sell discipline, because it's done the job we asked it to do as far as the investment increases. Now, some people will say, how come you didn't write it 40%? Well, then I could say the same thing. Hey, how come you didn't write it down 30%? So you really have to be careful. I'm not convinced that international is the way to go at this point, and I'm going to tell you why. The reason being is this pandemic is worldwide. There is no safe harbor from this pandemic. And we've seen flare-ups in China. We've seen flare-ups back in countries that have not recorded a coronavirus death in quite some time. And then all of a sudden we start to see flare-up. And here in the United States, we're seeing a huge flare-up. What I would do is I would go into multinational companies or companies that have 10% or more concentrations in international holdings, and that's a better and a safer bet. And that way you don't have to worry about the geopolitical risk and the like pushing down the portfolio, or the currency risk. These are all things that are, make it a little bit safer, where you're still investing in companies that but companies that do have significant overseas presence. And that could be a better tactic at this point in time, until the numbers from these countries come out better. We want to stay away from, per se, an international index, or worrying about whether a country is reporting its numbers correctly and such. So that's the route that we're going at this particular point.